Hello once again, everybody. This is Rich with High Percent Trading. What I want to show today is the ability to trade differently a normal range day versus an expanded range day. And I know some of you may have indicators or analysis tools that will enable you to, first of all, determine whether the day that you're trading is a normal range day, a compressed range day, or an expanded range day. One of the ones that we're using over here at High Percent Trading is the Big Band indicator. This is newly available now. And basically what it does is a couple of things. First of all, what we're showing is the Dow futures from, first of all, Monday. I'm going to show Monday, Tuesday, and Wednesday of this week. This is Monday, November 30th. And starting out, this indicator was predicting a normal day, and for the most part it was trading normal, and I'm going to show what that means. But what's important is this is the what we call the European session open. This is 3 a.m. Eastern time. That is midnight Pacific time. I'm on the West Coast. These charts are Pacific time. But it was starting out a predicted normal day. And what that means is if you've got an analysis tool that enables you to see the relative movement of the markets day by day as they've occurred on specific days of the week and through specific times, that's what this indicator does. And so on a normal trading day, normally what will happen is after the market makes its open, which it did here, it will usually travel down to the second level here or the second level up here first of all. That's in a normal type market, and generally it's going to get resistance up here with a nice bounce or support down here with a good bounce. So as this market continued, and I'll just move it forward, one of the areas that we were looking at, obviously there's ways to get long in these markets, and I'm not going to talk about that now. But what I am talking about is areas to take profit and or even counter trend, because the counter trend trades are very good trade setups if you know where the important levels are. So as this market continued to move up into this level, as we got here, you could see that we had a predicted normal range day, and we actually were in a normal range based on the analysis that this market tool does based on the day the day of the week and the actual movement up to the time that we're looking at. And so you can see what happened is once we came to this level, we came in and then we sold off very sharply. This enabled you to get a very nice profit initially. If you were in here counter trending, generally we first of all come back and check the first band lower, which we did. You can see they tried to retest one more time here. We were staying in a normal pattern, and now it was starting to tell you that we're perhaps going to expand now because the actual was expanded. And when that happens, we start to look another band higher. In this case, we did not get there. We actually sold off very sharply after that. So the first level that you were looking at was here on a nice counter trend trade. As you came back and penetrated back through, you can take another nice short. Now notice what happened. This market sold off. We got up towards the pit open and we retraced downwards. And now it's telling you that we're in an expanded range. So we're not looking at taking any more of these band level trades unless we get back to normal again. And as we move out, again, it's analyzing the time of the day. It's still fairly early in the pit session. We have moved back to normal. An important level again is right here. This is the second band down. If you recall, what I said was from the opening in the session in a normal range, first two bands, the second band up or the second band down, are important levels. And indeed, the market came down, tested it, rallied back up for a nice about 30 tick gain, and then continued much higher from there. Still time left in the session. Came back again, rechecked the level, and of course after the market closed, the normal session, it rallied up again to this level again. So you see it moved from this important level to this important level, and we stayed in a normal pattern all day. All right, that's Monday. Now let's take a look at Tuesday, and I think you can start to see the benefits of having an analysis that can not only tell you what type of range day is predicted, but what you're actually doing during any given moment in time, and where these important levels are, where you can not only take profits if you're riding in the direction of the movement, but actually counter trend the trades as well. All right, now I've moved over to Tuesday. This is December 1st. Now you can see on Tuesday, because of the market movement that occurred the prior days, it was predicting a compressed day, more of a compressed type of day. However, if it starts trading normal, then again the important levels initially will be this band up here and this band down here, and then of course you analyze the markets once we get there as to what condition it's in. So we started to move out. We basically came down and tested the first band level. All right, couldn't quite get down to the second. It was predicted compressed, and at this point in time, which was around 2:30 or 2:40 a.m., we're still being in a compressed market. The market then continued to move. We're getting, we got close up to our pit open session now. We're still in a very compressed range. Again, if we go normal, the important levels will be up here and down here. As we moved higher, we started getting into a normal range. You can see it's telling us now we're actually starting to trade in a normal range with normal price activity for this particular day and at this particular time of the day. We moved up, coming up to this important area, which was right here. All right, this is your area that you're looking to either take profits in if you're long, or to execute a counter trend trade if you're short. And you can see we broke to the downside in here. And now it was telling you that based on this movement, you need to be careful now because we've gone to an expanded type day. So it's telling you that you want to be quick to take some profits and also protect a short, because there's chances are good we may move up to the next level up here. So we got continuing movement. We pulled down very nicely off this short. Remember the level that we were looking at down here? I don't know if we're going to get to that or not. No, we came close, but not there. But again, a very great trade up here. We're still in an expanded range. We're still going through our trading session. Came back up and tested it again. Notice it was normal, so again, a short. And then as we moved higher towards the end of the session and a little bit later, we came up and tested this third level in here. Not many traders are trading at this time, but again, it did get up to the third level. But notice the important levels that we talked about, and you knew those in advance if we're trading normally, was this level right here and this second level down here. So again, I think you can see the real utility of being not only able to quickly analyze what the market is doing at any given moment in relation to what it should be doing, but also having important levels that you can not only take profits at, but make some very excellent high probability, high reward, low risk trades. Now let's take a look at the trading for today, which is December 2nd. All right, this is our analysis for December 2nd. You can look over and see that today was predicted to be a normal range day. Initially, the important levels in a normal range day will be this area up here and this band area down here. As the market started to trade out, it was pretty well contained for a while. You can see that around 1:30, this indicator was warning you that although it's predicted to be normal, right now we're trading in a compressed range. Compressed means a lot of times you're just going to get to the first band up or down. But as the market continued and it did its analysis, we started to unwind a little bit more and we got more into a normal range. Now it's telling you based on this time of day, based on this market movement and based on the day that we're trading, which is Wednesday, we've moved back to normal. Remember, this was the important level down here, okay? Very, very important level. The market came down and tested it, got within a tick or two. Now, a very experienced trader will know that you're not going to be stingy sometimes for a tick or two. Good traders will come in and hedge this a little bit. They'll watch to see what happens when it comes down here. If you get a reversing bar, they'll enter. But this was the area to be looking at in a normal range day. And the market moved smartly right up out of there, okay? Moved up initially about 50 ticks off of there. We continued to move throughout the day. This is about mid-pit session. Came down again now and tested the level, right? Came down in it. Had a nice counter trend bounce to the upside, right? Nice counter trend bounce. Came back up, tested the next level. We're still in a normal range. This is still an important level in the normal range. We came back again and tested it. Moved up to enable you to get a nice scalp trade, trying to hold for runner. Now the next thing is, as long as we stay in a normal range, if we come down and violate the band through here and we get to the next band, which is the next one down, the same principles will apply. We can go ahead and take another entry down here, either taking profits or counter trend. And this is where we're at right now as we speak. It's about 10:58 a.m. Pacific time. Came within a tick or two of the next level. So if you want to mark this level, this was the 17,805 level down here. 17,802 is the band. You can check later on to see on your own charts what happened on this trade, okay? But there it is. This is a very important tool for traders. That's something to have in your arsenal. You should have something equivalent to this when you're trading. It's not only going to give you a heads-up prediction as to what you're expecting for the day, but it's also going to tell you what you're doing on the day, how that fits the expectation based on the day of the week, the market movement, and the time, and also gives you these extremely important accurate levels to take profits on and to counter trend with very relatively low risk, high percentage type trades. Thanks for watching. I hope this was beneficial, and I hope you're able to take something away of benefit for your trading. Thanks again, everybody. Bye now.